August 17th, 2026. Daily Fiscal Pulse covering Monday's session. All numbers you're hearing are settled figures, not real-time data, so keep that distinction in mind as we move through the breakdown. Let's start with what's actually moving markets right now. The tape isn't showing us a clear dominant narrative yet. You're seeing headlines around bond market pressure hitting Main Street while Wall Street watches wash, and that's definitely shaping how people are trading. But narratives can shift quickly. The actual flows tend to be a more reliable read. Monday was definitely a spending day. The net transfer came in at $52.6 billion, and interest payments did the heavy lifting there at $85.4 billion. That's substantial liquidity entering the system. The S&P E-minis are painting a healthier picture than the flow data alone would suggest. Futures closed at 7,769, which is well above the 20-day moving average sitting at 7,629. That 20-day range is spanning roughly 493 points. Despite the fiscal headwind, price is holding its own. Zooming out, the uptick in spending is pretty clear once you look at it. Government spending over the past 5 days is averaging about $22.9 billion per day. Put that next to the 20-day average of $13.9 billion, and you're looking at meaningfully more cash working through households and into the market. The year-over-year picture confirms it. We're fiscal year to date at $1,568.4 billion in spending, which is running roughly 6% below where we were at this point last year. That's a significant pullback in fiscal support, and it absolutely matters for liquidity conditions. From a positioning angle, the fiscal backdrop isn't tilting the scales strongly in either direction. Our conditions gauge is reading at -23, but here's what the historical record tells us. We've been in similar setups many times over, and even with tighter liquidity, the S&P has still managed to average around plus 0.8% over the following month. The market doesn't follow liquidity in a straight line. It can grind higher regardless. That said, the positioning itself is worth watching. Leveraged funds are continuing to add long exposure while margin debt is sitting at the 96th percentile. That's elevated territory. Historically, when you see those kinds of levels, they function more as a caution than a confirmation. There's another pattern worth flagging. We've now seen 2 straight days of fiscal transfers moving higher. In our historical work, that particular pattern has tended to show up before short-term ES strength. It's not predictive, but it's a setup we monitor. Looking ahead, there are dates that could shift things. August 19th brings the Social Security Administration payment cycle, the third Wednesday of the month, which typically moves short-term flows. The next major Treasury coupon interest payment window is due around August 15th. Right now there's no clear fiscal signal in either direction. What happens with the scheduled flows ahead will tell us whether that changes. That's the setup as we head into the next trading session.